elevation. Big blunts, dope boys wanna smoke with me. Now we ride double M's through the whole city. Niggas talking down, but they always feel me. A 9-figure nigga, all I wanna talk is business. I seen a big mouth get a closed casket. Self-made, took over the whole racket. A kilo after kilo, see who moved the most. 200-foot yacht, she wanna see the coast.
What's going on, guys? Dropping in for a Patreon promotional, all right? Which means this video will go on the Patreon first and then get onto YouTube later. We're going to be talking about Huma. We're going to do an analysis on this ticker. This is a biotech play. This is requested. We're gonna do some analysis on their cash burn and so forth, and then we'll talk about, is this a good investment or not, in my humble opinion. All right. So ticker is Huma, Huma, just like it sounds. Humacyte Incorporated trades on the NASDAQ for 94 cents a share. Market cap is 181.09 million. All right. This company has been on the market since 2020. And as you can see, it has lost 90% of its value. All right. Headquartered in Durham, North Carolina. This is a biotech company in the healthcare sector. And what do they do? All right. Well, they create, or they provide, artificial tissues that are bioengineered, that more so specialize in artery replacement. Think about the blood vessels and the blood that goes through your body. And if there's like the femoral artery, they can replace that or a portion thereof. Okay. So I see definitely a need case for it. We'll do a sniff check on their balance sheet. Looks like 50.97 million in debt, 19.49 million in cash. Not a good balance sheet. All right. They got a portion of their market cap is debt. Enterprise value sits at 212.57 million. So with that, I'm going to go straight to the balance sheet. All right. And let's look at it. Cash is going down. All right. We'll go on an annualized basis. You see there was a lot of capital raised in 2021. There was a euphoric market there. So I don't blame them or a lot of these companies for raising a lot of capital during that year. But since thereof, they have burned over a couple $100 million in cash. Current assets, total current assets are 41.4 million. In line with their long-term assets, which we will find here. Okay, so looks like we have a lot of deductions on accumulated depreciation. Total assets sit at 91.5 million, but they're down dramatically, cut in half on the long-term asset base from 2022. So and more so from 2021. So on a long-term asset basis, not looking good. Long-term liabilities, debt is going down, but capital leases is seeing a little bit slight increase. And then total liabilities is going down, but not outpacing total assets, if that makes sense. All right. Let's go to their income statement. This is a barely revenuing company. They did have some sales back in 2020 and 2022, but all in all, not much of a difference from trailing compared to years ago. All right. Diluted weighted average shares and shares outstanding. Shares are going up. All right. From 2020, they had 5.8 million. Now they have 143.1 million. Crazy dilution. If you've been following along on my channel, I have been more so the one to really be, discounting of dilution, or liberal when it comes to dilution. But This is a little different, guys. All right. At this pace of dilution is pretty concerning. All right. I'll have to admit. Let's look at earnings consensus estimates. All right. Um, analyst consensus estimates in 5 years got them doing $956.33 million, almost $1 billion. All right, I'll pull out my handy dandy calculator. If analysts are right and they do 956.33 million in 5 years, and if investors coming in right now are buying the actual company at enterprise value of 212.57 million, that is getting a 4.49x on sales, but balanced off dilution. Once again, I will pull out my handy dandy calculator. Let me get this, go back to their shares outstanding. Bear with me. So if shares are 143.1, and then about 5 years ago, they had 5.8, there was a 24x on share growth in the wrong direction. So this is a polarized different. If I divide there's a 5x. Shares are outpacing growth by 5x from a quant historical basis. If I forward that quant over to 5 years ahead and I calculate their sales based on what is being bought right now, dilution dramatically outpacing the growth. There is an aspect where shares are going to be raised in a lot of these growth companies that outpace, but this is a whole nother ball game. We're talking 5x burn rate or dilution rate, and with the metabolism of this small company, you know, with the metabolism of cash burn on this small company, net income, is negative. We'll go down to their free cash flows. Free cash flows are negative. They did do a equity raise of 56.5 million back here in November. We'll go to the balance sheet. Where did a lot of that cash go? It went down to paying debt off. All right. So whenever you have a growth company, a company that's growing with a growth stock, and they don't have sales, or they don't have much sales, and they don't have much free cash flows, and they have high cash burn, the actual free cash flows being negative in combination with negative EPS is a double whammy. It's a double-edged sword, all right, on a negative side. So debt, sure, the debt is fixed, but debt exacerbates because now you have a situation where you have an entity that owes money that makes none. All right. And is actually burning cash. So there's something to consider. The whole idea of, companies raising debt to the whole idea of companies raising debt is to save on shareholder value on the dilution basis. All right. So if a company raises the debt and just says 8%, it's just they're going to pay 8% of that outstanding balance, as averse to issuing out more shares and dilution and so forth. It's cheaper in the value creation if you think about it in that aspect. All right. So that's something to consider. All right. Let's talk more about their story. All right. So, and that's really what's exciting here. They got a great story. All right. So they're already selling this product and testing out this product. And, this, this product here is being used in the actual war in Ukraine. All right. Through a study in a humanitarian program. So they're testing out this product with troops. All right, troops that are getting hit on the battlefield from blast injuries, trauma, just basic combat injuries that are very wide and vast. And you got these blood vessels all throughout the body. So odds are, if a soldier gets hit, one of these blood vessel arteries is going to get hit along with it. And that's where this their product Simvez comes into play. And as you can see, there's a femoral artery repair right here with the Simvez product. All right. And pretty much the tubing, there's some artificial tubing that goes into play. Think of the business model right now, anyway, as this is a company that sells plumbing equipment for the actual human body. All right. And think about these doctors as human plumbers that go in and replace the bad plumbing pipes with manufactured pipes and so forth. All right. That's one way to think about it. All right. So there's that to consider. I don't, I see a good need for this product, though. All right. Because trauma is not limited to just battlefield injuries. They happen in car accident, freak of nature, act of God stuff happening. A trauma can happen to where someone needs surgery. All right. Someone gets hit the wrong way from whatever object. Now they got to go to the ER, and then they get admitted and they need trauma surgery. And then the hospital has their own trauma section. And I can see this product being readily sold and available wholesale, through distribution, through various hospitals all throughout the world. So huge TAM on their Simvez product, I assess. Um, that's the story of it. Okay. Now, one thing that I'm actually taking under consideration, well, along with their cash burn, is the execution. Let's go to their earnings and let's look at what they've done here. All right. Various misses from actual street expectations and the actual taking care of their stock, which is going down to under $1 on the NASDAQ. All right. So they need to maintain over $1 a share. Uh, this can be a stock that's an applicant for a reverse split, where the management will reverse split the stock to keep it on the Nasdaq exchange. All right, I'm very bearish on reverse splits because they're indicators that the company is trying to survive on an actual indices exchange. Okay, so there's that to consider. So they got this great story, but I think they don't have good execution. You can have the greatest story in the world, and high level investors can value the story and assign it a valuation. But at the end of the day, if it's not executed upon, the story valuation will depreciate. Okay. And I assess that's what's happening with Humacyte. So, what is it that, what is this a good investment or is it not? All right. Um, I think the value proposition is there. By the time, if they dilute at that crazy rate, if they maintain even a portion of that dilution rate, and they burn that much cash, by the time they get to that billion in sales, you know, your shares are going to be diluted into oblivion. That's kind of the idea. All right. But that doesn't take under consideration forward projections, which have the company exacerbating and 3.5xing with the next 4 or 5 years down the road. All right. So this is a long-term speculative investment. Me personally, this isn't for me. All right. I will, there are times where I will override the quant on the balance sheet with their cash burn and all of that, because I valued and assessed their IP and valuation story is worth it. We'll go back to the portfolio here. I don't hold a stake in this company, So IBRX is my biotech play. They're in a similar situation where there's a lot of derivatives. Their balance sheet is warped on a bad side. But I was able to override the quant on that due to their execution and catalyst happening with their crazy, amazing story. I'm not willing to do that with this company. All right. That's my personal, humble opinion. I can't, me personally, it's too risky for me. Challenges I see around the corner is, there'll be a threat of delisting and this can become a pink sheet stock. All right. So, and who knows? Maybe they get a little catalyst and their stock gets bumped up a 2x and then bleeds out because of the dilution and cash burn and so forth. All right. So, if you're willing to, like, me personally, I don't see a many cases of an investment case here. I think that DoD sales is probably the safest business model to start with. But DoD sales are very lumpy and they can have a problem within, given meeting street expectations with that lumpiness of disbursement of funds from the actual government. So I see challenges there as well along their journey in the next 5 years. All right. But all in all, growth is growth. As long as it's delivered, it's delivered. It just along the way, it'll hurt more for the investor. All right. Will they dilute at the same pace from 2020 to now in the forward 5 years? Maybe, probably not, but still the dilution is along with their cash burn rate and their balance sheet health, it's still going to hurt. All right. And I'm not willing to take that journey and go through that pain. All right. So that's what I got for the Huma, stock analysis. Not for me. I got my biotech play. Investors getting in here. I will say this: investors getting in here at these valuations. A lot of failure is priced in. A lot of that dilution is priced in. You can still multi-bag it, but at the same time, the risk versus reward, honestly, to me, is not there. They can go bankrupt, right? And this isn't I don't assess this as a situation where the DoD will save them from bankruptcy, um, or the government will save them from bankruptcy. I don't assess that as a case, especially in the medical field. All right. So if you're getting value out of this video, like and subscribe, check out my Patreon. You get the latest and greatest of what I'm doing. You got a community of like-minded investors. This is the way to invest in your development as an investor. Luckily, I got one slot open, guys. All right. And that's market took a little dip, someone left, so a slot became open. Our investor values, my business model is not I'm trying to get clicks and views on YouTube. My business model is actual result oriented gains on the market. This community, we transform our investor values into investor value. All right, $9.99 a month. You really can't beat it. I gotta save 20% pay annually. So if you don't like those annoying little monthly charges and you'd rather just do an annualized membership and save some money that way, there you go. So that's what I got for the Huma site. I got more videos coming out. I thank everybody for their support in my channel and interest in my channel. Be on the lookout. I got more videos coming out as we go along. With that being said, I hope you all enjoy your Super Bowl weekend. I love y'all and take it easy.